we go. It's a little bright, huh? Yeah, I might have to tone it down. Let's see. Looks like I might have to tone this down. That is hot. Good morning, everybody. Will you guys just give me a confirmation that audio is working? I'm going to turn the lights down. It's a little bright. Just let me get a thumbs up that audio is working. All right, let's see if that looks better. Do we have audio? Audio working? Yep, working. Perfect. It's 10:30 here. Wherever you're tuning in, good morning, good afternoon. Good to see everybody. Before I start, let's start with this. Does anybody have any good news to report? Let's start with that one. Any wins that have happened over the weekend or yesterday that we can promote? Sergio, what's going on? Any wins? What can we highlight? Post your wins right now. Any good news? Let's get it out there. I think that's a important thing for us to all share. Just got a promotion at work. PKC Cameron, congrats, legend. That's awesome. But it's 1:40 here afternoon. Zore. Love that start idea. Let's do that. We woke up today. Kyle Anderson, we woke up today. That's a big win for all of us. We don't give that enough credit. It's one of my favorite quotes that I have ever heard anyone say. Got a manager role at Buddha Gump. Heck yeah, I love it. One of the best things I ever heard, somebody said, would you... How do they phrase it? If somebody offered you $10 million, just gave you $10 million, but you didn't wake up the next day, that day was going to be the last day of your life, would you take it? And everyone goes, no, of course not. And so we value our life, significantly above something like $10 million. But how would we celebrate if either of those two things happen, right? The waking up the next morning, we never celebrate. We would celebrate getting a $10 million hit. So I think that's it's a really good perception change. Sergio just came home from prison. Welcome back, big dog. Successfully booked another restaurant as a consultation customer. El Mauricito, congrats, dude. That is awesome. We got some wins starting up. Family is healthy, winning. Tyler, absolutely. Had a baby girl. Sea Pickles, congrats. Girls are the best. I have 3 of them. They are fun. Cancer-free and healthy family, Jess Hoover. That's great news. All right, we got some good wins today. Heck yeah, everything's going well. Started coding. Lil Coy, let's go. All right. Heck yeah. Sounds like we've got some wins. Let me just peek over. Finally made director at work. Kate, that is amazing. Congrats on that one. Congratulations. I am healthy. Viola, that's something that we overlook, unfortunately. Being healthy, waking up, these are things that are like massive wins that we just like breeze over because they typically happen every day, but very, very important. My good news is that it seems my favorite skater from my childhood is still doing good. I appreciate you. Life is good for me. It absolutely is. Chris submitted a creative bid last week for $25K that was passed on. Sent it to my friend who is a bigger in advertising and now wants me for his upcoming project because I'm relentless. I love that. Look, something that I think is really important for maybe not always in business, but in business and in sales, no's are not a bad thing. Like sometimes we hear no and it comes off as being so devastating, but no's are a lot better than maybes. This is what they say. This is one of the best quotes I've heard in sales. When people say yes or yeses, give us money, right? No's give us time. They free up our time. They give us our time back. Maybes do neither. They don't give us either of the two. So, at least on because of my business, it's this business and the last business, I raised money, right? I raised money from my first business. Now that I own a business that does investing in real estate for investors, we're constantly raising money. And so, I find myself, as one of the founders doing a lot of sales or working with our sales, kind of our people in sales. And that's one thing you constantly got to tell people. Like, hearing no hurts. Hearing no can be discouraging, and it can make you feel like what you're doing is not right. But you gotta flip the script on that one. You gotta change the perception of it. Right? No's are inevitable. It's when you're selling something, when you're raising money, when you're doing anything, dating girls or dating guys, whatever it is, you're gonna hear no's. That's part of what it takes to succeed. And so getting to no's quickly is very important, right? Like, if you're talking to people, you like, when somebody says no, that's not a bad thing. Actually, what's funny, I was thinking about this the other day. My wealthiest friends, right? My friends that are worth a lot of money, they are always the fastest to get back to me when, I'm talking about a new investment we're doing. Whether it's a yes or no, they are so fast to get back to me. And when it's a no, it's like, Mikey, it always starts with, thank you for sending me this. Like, everybody who has money wants opportunity. Don't forget that. But what they'll say is either this is the wrong timing or this doesn't fit for these reasons. Please send me the next one. And it's quick, right? I love that. I love that I know, like, they're in or out fast. What's interesting, though, the people that have money, they never have to make an excuse for why they're not making an investment, right? It's, hey, timing doesn't align, thank you, boom. Or not looking at investments, boom. Or this fits, boom. But what I found is the gap of people, and it's not those making between $200,000 and $400,000 a year. The reason why I say that is because for my company, you have to be accredited. Those people that are on the pursuit, they're typically pretty quick as well. It's interesting, there's a mid group that is not. And it seems to always be the person making, and this is going to sound like a lot of money. I'm not saying it's not, but just in context of what I do, this is what I see. The person making $600,000 to $1 million a year, they're usually like the worst to get back to you. They're constantly making excuses for why they can't do things. And what I found is a lot of them actually don't even have the money to invest. They spend everything they make. It's crazy. So all that to say, it's a very long-winded way of saying, be thankful when people say no. Getting to no's quickly is important. Lisa is telling me, why is there no sound? Can I just get a confirmation that there's sound? Eric, where is the money? This is the best. Okay, so one, I just did a video on the 5 most profitable businesses. So go back and look at that video. It was like maybe 2 videos ago. The money is wherever you can solve a problem. This was one of the best pieces of advice I was ever given. If you want to make a lot of money, solve big problems or solve smaller problems for a lot of people. That is how you make money. Thinking about me, for example, right now, like, what do I need? Let me think of the last person that brought me there's a perfect one. Scheduling, right? Like, we could use help scheduling people for our podcast. That I'm so willing to pay for somebody for that. So that is my problem. My problem is it's hard to schedule a lot of people in a consistent manner on the podcast. I need help with that. Willing to pay somebody, right? Find things that people need, pay them for it. One thing that I liked, and when I talked about the 5 most profitable businesses, one of the things that I think is a huge opportunity is in accounting and tax preparation for the gig economy, right? This is a big one. The gig economy exploded. It's gotten really big, and it's freelancers. These are like self-employed individuals. They don't like doing their bookkeeping. They don't like doing their reporting. They don't like filing their taxes. That is something that they need help on. That is a great opportunity for you to start a business and focus on that industry. All right, what's going on in the news? Has anybody checked out what's going on? If I look at this, it's probably going to be filled with, I'm sure, DNC because of their convention. What is going on? 5 shopping trends that reveal how customers are spending their money. I wonder if it's just going to give us information on if spending is up or down, because that's the big one right now. How healthy are consumers? Consumers maintain intentional shopping patterns, with clicks dropping 29% as conversion rates increase 32%. Okay. Shoppers saving money. It doesn't look like there's anything here. Yeah, nothing there. How do we feel about the economy right now as we're looking at what's happening today? Is the economy in a, oh, this is interesting. Everybody see this? RFK campaign looking at joining forces with Trump. Really? Before I read this, what's everybody's thoughts on RFK? I want to know everybody's opinion on RFK. Do we like RFK? Is he a little bit wacky? What's our vibe on RFK? Just seeing, this is breaking, that he's thinking about joining the Trump campaign. The independent presidential campaign of RFK Jr. is considering abandoning his quest for the White House to join forces with Donald Trump. Kennedy's running mate, Nicole Shanahan, says in a new interview. So she's, wow, okay. Or the option is stay in the contest and try to win more than 5% of the popular vote and establish ourselves as a third-party alternative to the Republican and Democrat parties and build on that ballot access for the 2028 election. Interesting. Really interesting. Okay. He says things that matter. Anti-vax, it makes sense. He needs to be made head of the FDA. RFK has no idea what he's doing and says things before researching it. Interesting. I actually, that wouldn't be my takeaway of him. Nate, he comes off as somebody who does his research, but has different views than I would say like conventional. I don't know. He's an attorney, right? Usually attorneys are known for doing research. He seems educated in the things he talks about. Just some of the things he talks about are more, I don't know if you want to call it fringe, just not a mainstream outlook. Needs to be head of the FDA. Okay. Let's see what else is going on. Trump versus Harris. Here's how the election could affect your taxes. All right, as former President Trump and Vice President Kamala Harris unveil their economic agendas, both candidates have called for tax change that could affect millions of Americans. The next president will face trillions in expiring tax breaks enacted by Trump via the Tax Cuts and Jobs Act of 2017. Both candidates have proposed tax cuts and increases that require congressional approval. Do you think that's going to be a big one? Like for me personally, like I don't like taxes. I don't like paying more taxes. I like when people create tax cuts. Probably what I like more than that is regulation cuts. But what do you guys think? Do you think tax cuts is something that most people care about? I want to know what you guys think on that one. California rose their income tax again. I missed that, Josh. What are we at now? Jeez, what are we at now? Taxes will be a key issue. So this report, I'm looking at CNBC, is saying taxes will be a key issue. Do you think they will be? I want to know your guys' opinion. Will taxes be a key issue for this campaign? What's better, self-employed or corporate job? While I'm listening to everybody see if taxes are going to be a big deal this election, what's better, self-employed or corporate? It depends. What do I like better? I'm not self-employed. I started a business and we're a team. Like there's multiple people that work for us now. But I was self-employed before my last two companies. I like being self-employed better, but I think it's more based on personality and ultimately your comfort with risk. Like if you work in the corporate world, you are getting some stability or the feeling of security. And so if you have a smaller risk tolerance, you're probably going to be driven more towards that, but there's going to be, in theory, less upside. So if you're willing to be self-employed, you're going to work more, actually. It's not, in the beginning, it's not like a freedom of time thing. You are working more. It's more stressful, but you have the opportunity of more upside, that's for sure. Tax corporations more and tax individuals less. Why are my taxes paying for free healthcare and education in other countries, but not here? Nate, I would say that's probably a big frustration for a lot of people on actually both sides of the political spectrum is what I would say. That probably crosses over. Your taxes will be a hot topic that will come overpromised and underdelivered like every election to gain votes. Yeah, I actually really don't like this part of it where politicians sell things that they'll never do. I hear you on that. Corporate jobs give you good experience for when you are self-employed. Okay, so here's one that you're going to see, right? If we're talking about differences, I saw that Kamala Harris is wanting to bring the corporate tax rate up to, I think, 28%. So as far as the corporate tax rate goes, she wants to increase that. Trump, I'm guessing, will probably keep it where it is right now. What do we think about that? Do we like corporate taxes going up? This is the taxes that the business pays. Do we think that should go up? You guys can probably guess my opinion on it. Let's see what you guys think on that one. I heard real estate has a lot of good opportunities. Yes, I think real estate has a lot of good opportunities. Gold is at record high, $2,500. Yeah, we're buying right now. Let's see what everybody's thinking on corporate. If the government can print endlessly, why do we pay taxes? It's not to uphold the illusion that your taxes actually pay for anything. It's merely a drop in the bucket. Yeah, this is one of my favorite quotes, is that inflation comes from one place and one place only, and that's Washington, D.C., right? Like the politicians, the Fed, the money printing is what creates inflation. The hard thing about, I know we're not really talking about inflation, we're talking about taxes. So no, because corporations pass it on to the consumers. The increase in cost gets passed to the consumer. A lot of people know about economics. Price caps with higher taxes. Price caps with higher taxes. Price caps, I don't know if I made a video on this, but price caps is, I don't care what side you land on, price caps is a terrible idea. A terrible idea. I think, wasn't it Obama's head of his economic development, or one of his lead economists, exploded, like just, basically destroyed the idea of price caps. That's a terrible idea. They do increase taxes, or they do increase prices. If you don't know, you say increase. There's always a way to strategically reduce your taxes. My opinion, I know this is going to be obvious for you guys. I want more businesses created. Like I want it easier for people to create businesses, especially small business, right? The hard part right now is whenever you make it more expensive to do business, it hurts the small business, it hurts the middle class. it makes it easier for the largest corporations because they have enough money to get through the added regulation and the added cost. And taxes, you definitely see scenarios where when a company is accruing more expenses, they pass it on to the consumer. But the company has to stay alive to even accomplish that. And so what you typically see is when you make business harder to do, it's the smaller ones that go away. And so I think a healthy economy is when there's more small business. I like that. I think it's a better experience. It's a better economy. So I don't like the idea of increasing the corporate tax. The other thing is a lot of times you're taxing the same dollar so many times. It's like, your company's paying taxes. That's not the end of the road on tax payment. So I'm a big believer in make it easier for people to start businesses, because when you start businesses, you're talking about creating more jobs, more competition, which means we get to experience as the consumer better product and better service at a cheaper price. So that's one that I like. What else do we see going on? Extend the tax cuts. So you will see that. You'll see Trump extend his 2017 Jobs Act. What else going on in the world of the news? What's going on, everybody? Mikey, what's your favorite N64 game? I haven't played N64 in so long, I couldn't even tell you. My days are full with and I just don't have time for even watching TV, or the most I can get is listening to a podcast. And that typically comes when I'm driving in the car. That's all my free time. All my time right now that I'm not working really goes to the kids and my wife. Got to jump on a call, but I love everything you do. You're inspirational. Bored and Ninja, I appreciate you, legend. Have a great day today. Let's see what else is going on. Just watched Pin High, and the birdie came in for the win. Okay, so we have a new episode of Pin High. If you guys aren't following Pin High, it's a series we do with Commune Capital, which is my company, and it's kind of like an interactive podcast. We post it on our YouTube. It's every other week, and I invite somebody out to go play golf. And what we do is we bet on all of the par threes. We typically bet $25 a hole. And at the end, whoever wins all the holes has to invest that dollar amount in either a stock or a crypto or an investment of the winner's choosing. So this last episode, I played with a former pro golfer, which the people that I'm playing right now are too good, honestly. And he wanted gold. He's a financial advisor now. So if he wanted gold. If I wanted Bitcoin. And so I think it ended up going up to $200. I think winner took $200. There's some good conversation in it. So I typically ask 3 questions. Because he was a former pro golfer, now he's a financial advisor. I asked a question on transition, right? How was it to transition as a pro athlete into the financial space? I know not everybody's a pro athlete, but it's important to listen to his answer because we will all go through transition, right? There will be a point in every single person's life that's watching this where you will need to reinvent yourself. Transition happens throughout our lives multiple times. And so we talked about that. It's important. The other one we talked about was business relationships. Depending on what you do for work, business relationships isn't always a function. If you're on the finance side, or you're analytical, or you're an operator, that's not necessarily the case. But if you're on the front-facing side, sales, marketing, business development, it is. And the person that I played golf with, Chris Galiski, he's from Morton Wealth, he is unbelievable at relationship building. And so we talked about kind of his strategy, what he does, how he builds relationships to not make it feel like you're just trying to sell people, because nobody wants that. And then the last one, we talked about real estate. And he just mentioned, because they're financial advisors. They work with a lot of investors. They're managing a lot of money. And he was just talking about how, the retail investor just basically as in, funds only and just the stock market, maybe some bonds. And it was really good getting his perspective on the importance of adding alternative investments into a portfolio. That's what I do. So all that is going to be covered on Pin High. So if you want to check it out, it's on Commune Capital's YouTube. Let me know what you think. And I played good. I blew it on the first hole. You guys are going to see that, but I showed up. I played good. If you could advise a new real estate investor, what investment would you recommend? All right, Fort Collins Living Team for new investors. This is new investors. This is people wanting to invest in real estate. This is your beginner investor. The thing that you guys all need to be mindful of, because this is the trap of a new investor, is they never get started. Because the world of real estate, there's a lot of ways to make money, right? There's different asset classes. So storage, industrial, single family, multifamily, mobile homes, there's a lot of different asset classes. And then in those asset classes, you have different locations. And then in location and asset class, you have different strategies, right? And you're going to see there's so many ways to do it and make money that all of the options stop people from actually making a step forward and picking one. So for new investors, this is what I would say. Pick one asset class and pick one strategy. If you're going to be an active investor, pick one asset class, one strategy, and go all in on that, right? Don't worry about what other people are doing. Put the blinders on. It's really important to niche down with what you're doing and be the best at it, or be on the path of becoming the best. You got to do that. And so pick it, make steps forward, become the best at it. And in the beginning, it's going to be just you. So you're going to be wearing a lot of hats, but be mindful that right when you get to the point of bringing somebody on to help, you're doing that. Scaling in the beginning, or setting the foundation to scale in the beginning, is very important. If you're a passive investor, it's actually a little bit easier, I think, because you're able to participate in different strategies and different asset classes. What you need to do as a passive investor is figure out what you want to be investing in, and how, at least I did that. I started with, what are my goals long-term, right? When do I want to be financially free? And it changed throughout the years. When I was a pro skateboarder, I was trying to become financially free by 30 because, if my income source dried up, which was my sponsors, I wanted to still make money. So I was on a path to becoming financially free early. And so in that, I was putting a lot of money. I was being very disciplined in investing in assets that could help me get there. Real estate was a big one. But if that's not your goal and you want to extend it out, let's say you want to have, $5 million, $3 million, pick the amount invested by 55. And out of that, you're 55, you have $3 million, and you're going to draw, let's say 4 or 5% from that each year, right? That is at least going to help you start to make the investments today to create that scenario for you in the future. Usually what you see is, if you have a goal to, let's say, get to, let's just say $1 million, right? Let's say you have a goal to get to $1 million portfolio by the time you're 55. And let's say today you're 30, right? Most people are going to focus on appreciation or growth stocks versus, cash flow or dividends, because you're able to double your money quicker. So most people will look at doubling their money, let's call it every 5-6 years, because that doubling over and over will help them get to that point of, let's just call it $1 million of investable assets at year 55, right? Then as they start getting closer to that time frame, then they'll start looking for investments that are more dividend or cash flow heavy, so that they can pay themselves from their portfolio without the principal or the amount of investable assets going down, right? So you have $1 million. You think it's pretty easy for you to get 5% on your money each year. Okay, you're paying yourself 50 grand a year, and you're maintaining that $1 million portfolio every year moving forward. So that's how you kind of start planning. But even in that, if you're in like wealth build and you're looking for appreciation or growth, a lot of people will still look for diversification in that strategy. So if you're looking at it through the context of real estate, like you can have like a growth type of investment strategy and put some in multifamily, put some in storage, put some in industrial. All of this is a very long-winded way of saying have your plan and then act on it. If you're active, though, very, very important for you to just do whatever is going to pick the asset class and the strategy that's going to allow you to start, right? Like a lot of people get hung up on, in the multifamily space, should I do single family or should I skip single family and go straight to multifamily? The answer is do whatever one's going to make you do it, right? If the goal of starting in multifamily is going to make it so that you're not going to actually invest in multifamily for 4 years, start in single family. I think it's important to get in the game. Mikey, can a retail investor use licenses to become accredited and find alternatives? I heard the Series 7, 65, and 62 can do that. Josh, the answer is yes. They added a provision into the requirements of accredited investor. And if you are licensed, you can become an accredited investor even if you don't make the income threshold or have the net worth. So yes, you can do that. I believe we actually have some investors invested with us that fit that criteria. I think we have some financial advisors that maybe don't make the $200,000 a year, or if they're married, $300,000 a year, and are still able to invest. If you could go back, would you still go into storage unit investing or start with some other type of real estate, and why? Lastly, how much do you need to get into the storage unit game? Green Thumb Aquatics, that is such a good question. Okay, for me, if I could go back, I would still invest in storage. The big reason I got into storage when storage was like far from saturated, it was still really new. And so there was a lot of upside potential in storage when I got in. I would have still done it today. The other thing is I've gone through downturns now with storage, and I find a lot of comfort when I'm making investments in asset classes that can get through adversity or get through a downturn. That's really important for me for me making investments. And so I really like that storage does that. Look, if you're talking about like just the excitement of an investment, storage is not that. Storage qualifies more as like a boring business, but this is what I like about it. They're cheaper to build than multifamily. They cash flow well, they appreciate, and they perform very well during recessions, or at least historically they do. So it hits the criteria on that for me. Now, if you ask me like, what am I more excited about? Right now, I'm more excited about multifamily for me personally. I think there's a greater opportunity at the moment. It's not to say that there's not opportunity in storage. There still is. We bought a project last week. Like we are still buying, but I think there's more in multifamily because we're undersupplied in so many of these cities. Like there is a housing crisis in so many cities across the nation. And so this is what I see as the opportunity. One, in that scenario, I think it rewards the builder, rewards the developer. If you're adding more units when markets are starved, you're being rewarded for that. Two, for me personally, I like multifamily, or even if you're in single family, I have more of a marketing type of brain. And so I like finding ways to go above and beyond like whatever your product or your offering is. In this case, a home, like these are ways that you can really add value by increasing the experience for the user. And I'm not sure there's a bigger experience than where you live. So I really like it for that regard. And then this is the last one. And this is interesting because you're now seeing both candidates talk about this, right? For Harris and Trump, they're both talking about affordable housing. They're both talking about the housing crisis. I would not be surprised if you see more and more either incentive or deregulation when it comes to building, which is going to increase the profit margin for investors. So I think housing in general is a great place for investors to be right now because it's a need. And anytime there's a need, you have the opportunity to make money. Right now, we need more housing. There's not enough of it. So I like it for that. Somebody called me a scammer. Did you see that? They call me a scammer or somebody in the chat. Sad old Mikey, everyone. This guy's a scammer. Oh, it's this guy. Smiley Wild, sad old Mikey. Everyone bun what this guy says, scammer. Okay. Emily, scammer. Ignore this guy. Wait, are we talking about me or ignore this stuff? It's rotting your brain. Wait, holy cow, let's figure this out. You talking about me or somebody in there? He knows. Oh, maybe he is talking about me. Okay. You're welcome. Okay. Caesar. Okay, yeah, haters gonna hate. Okay, this is good. If this person's still in the comments, I wish I could pull them up in the chat, but I'm using a streaming software. Smiley Wild. Okay, let's start with this. I don't know if you're going to be capable of having this conversation, but we're going to try. What do you believe I am scamming people with? Let's start with that one. What do you believe? And I'd be blown away if you give me an answer. I guess there's a troll in every group. Thanks for what you do. Ignore him and laugh. No, this doesn't bother me at all. I'm more curious. When people say that, like, if they can have a conversation, let's have the conversation. Now, unfortunately, they rarely can. That's the part of this that sucks. But I'm curious. You're the man. Ignore his comments. Also, don't miss my last comment right before he said that. Graham, do you mind posting that comment again? I missed it. This is the part that I think is interesting on like he mentioned scammer. Go skate. This is all nerd stuff. All right, that is okay for you to say. That dude, Nick. I have a lot of people that still follow me from when I was skating and finance and investing. Like, look, I get it. Like, that's not a lot of people's interests that are skaters. Totally get that. That's a valid opinion. But for me, this is what I do and this is what I enjoy. Like, I've now been out of skateboarding for what, a decade? Retta's the best. I love you too, Retta. I've now been out of skateboarding for a decade. I've been in the business world now for 13 years. My company, Commune, like we're about to celebrate 10 years in business. Like my business is a real estate investment firm. You know, we have over 600 investors. I just looked the other day, like we're starting to post numbers. We're managing $315 million of AUM. And I really like taking what I've learned and what I'm, still learning on a daily basis and giving it to people who want to hear it. So I just enjoy it. But I totally understand if you don't. That I'm not going to criticize you on that one. But the scammer part, that's the one that, whoever that was, they don't. I didn't think so, but they don't want to have that. If you have $3 million liquid today, where are you going to invest it? Okay, so where I would invest $3 million does not mean that's where you're going to invest $3 million, right? How we all invest is very personal. That's why it makes it hard to give this type of information out. But if it were me, if I had $3 million, I would first look at my business and I would look if there's an opportunity for myself and partners to invest more money into our company to grow it faster. That'd be the first place I'd look. The second place, I have a lot of money going into real estate. So if I were going to split that out, I would probably put 2 to 2.5 into multifamily and storage because that's what I do. So I would just put it in a more real estate. And then I would take the 500 and probably sprinkle that out over 5 investments, probably more on the startup side. I really enjoy investing in startups. So maybe I'd split the 5 in maybe PE, venture, and maybe either fintech or prop tech. I like property tech, and I do like fintech still. So I'd probably split 2 of the investments, maybe even 3 into those 2 categories. That's what I would do. That doesn't mean that works for everyone else, though. It's crazy how taking care of yourself and your family is nerd shit. Well, a lot of it is age too, right? Like that's something that's probably like really important. Like when I started skating, I was 13. I turned pro at 20 and I skated into my 30s, right? And even when I was skating in my 30s, like my biggest audience was 13 to 17-year-olds. Like that's who's buying skate product, at least if you're looking at the masses. So it's a younger group. Now, most people, and I would say this is the hard part about people learning about money, is people don't typically feel the need to learn about money until they get more responsibility, right? It's usually when you get married and have kids, that's when you're like, holy crap, what is this whole world with money? And I need to learn about it. And so, if you're in your 20s and you're skating, that's usually just not on your radar yet. So you usually see it coming. I would say from the athletes that I work with, on the skating side, I usually don't get hit up by skaters until late 20s is when they'll go, what's going on? How do I do this? And then I would say the conventional sports, like, football, I talk to a lot of NFL players. They seem to be the most out of the players I talk to. It's usually towards the later end of their career that they want to start figuring out how to do this. Now, they're a little bit more active in investing. I think the size of the league, and they do a lot of work on like prepping new players, the importance of getting money out and invested. But sometimes they don't get good guidance on what they should be investing in. So you see a lot of football players investing in such high risk investments when they're young. And then when they get to retire, like all those investments don't play out, or the majority of them don't. So that would be maybe the tweak that needs to be made on that end. If you're still taking people on your podcast, I would be honored. I've been in residential for 6 years, and I'm currently working on a deal in commercial. Casey, we schedule. Oh, you might be talking to Graham. Okay. Sick. Mikey, would you be open for a chat regarding how to structure a value add through new developments? Charlotero, this is probably the best way to do that. The answer is I would love to help you kind of work that out. The challenge is my time is so limited that I'm concerned that we won't be able to find the time to do it. But what I would do, I would bring you on a live and do it on live with you so that people can watch us go through the exercise, so that you could learn, that other people can see. And then at least for my time, we can kind of, I don't want to say kill 2 birds with 1 stone, because what you're asking is important, but that would at least probably make it easier for me to do that. So shoot me a DM. Let's try to figure that out. Yeah, structure a fund. They are not easy. It's super complex, but I would totally go over that with you. Mikey, what's wrong with a $25K first house credit? Rocket. Okay, this is the challenge with giving credits. It's very similar to what put real estate in the leading up to the financial crisis. There was such a boom in real estate because they added to the buyer demand by giving loans to more people who wouldn't traditionally qualify for those homes. There's a similar thing at play here, which is anytime you increase demand without increasing supply, prices are going up. It's basic supply and demand. And so if you add or give money to individuals that don't have it and now they're able to buy, what you just need to be aware of is there will be a cost impact to it. And so my whole point with that was Right now, we're dealing with an affordable housing issue. Real estate is overpriced right now. I'll tell everybody that. Real estate is too expensive. Does that mean it's going to crash because it's too expensive? Nope, not at all. The reason why it's so expensive is because the supply-demand metrics, you guys have heard me say this, is so wildly off, right? Like, we didn't build homes at all. I mean, yes, we did, but from a percentage standpoint, like, we failed. And so in a lot of these markets, there are so many more people looking for homes or looking for apartments than they have available. It's driven prices up through the roof. And then couple that with inflation, right? Like, as the Fed goes and prints money, that's where we get our inflation from. Inflation drives real estate values up because real estate value is correlated to rent. And when inflation hits, you're going to see that moved onto rents. Rents are going to go up as well. And so the question becomes, how do you solve this issue? Now, there's going to be multiple components to it, but the biggest driver is supply. Add supply. That is what's going to solve this problem. And so knowing that real estate can't be built overnight, right? Like, look at California. This is the biggest struggle that California is having. It takes you 2 years or so to entitle a project, right? So that means you're going to lock up a project up, 2 years to entitle it, a year to get through your permits, 2 years to build it, right? So now you're 5 years out from the point of you actually getting a property under contract or buying it to a actual realized new unit count. That's 5 years out, right? That's if you know what you're doing. A lot of times it's longer than that. And so when you think about the amount of time it's going to take to actually get product online, we are not solving this problem anytime soon. Then you mix interest rate increase, right? This interest rate increase that we just went through over the last year and a half, so many projects that were in queue to be built are not being built. They're on the sidelines. So we're now going to have a gap of 2 years where nothing was built. Then it's going to have to slowly pick up when interest rates come down. We are so far from fixing supply. And so knowing that if you add credits for people to buy, real estate prices will go up. So that's my point to it, is real estate prices are going up if you do that. Heard you on Own the Outcome podcast. Love your intel. Casey, I appreciate that. Thank you. I did not know the lead time was that long. The lead time is so long. That's the hard part about this. And then the other thing you got to remember is, like, what kills the free market, and I understand that we're not in a total free market anymore. Like, we're in a mixed market. It's a capitalist and socialist market. Like, there's a lot of subsidies, there's a lot of government involvement, and that's not to say there should be none, but this is the important thing to know. Anytime the government gets involved, whenever you create subsidies, whenever you create regulation, whenever the government comes to solve a problem, prices are going up, they're not going down. Like, the most efficient thing you could create is letting business be business. But with real estate, that's very difficult because of the dynamic with local legislators or local policymakers, right? Like, somebody wants to build real estate, they can't just go build real estate. You got to work with the planning division in a community. You got to work with city council. There's a lot of local body that goes into that. And so even if you want to just build, you can't do that. And so there's a balance, like anything. And so that's my point about the buying credit. It'll just be more expensive. So if the problem is affordable housing and pricing being too high, this does not help that, it hurts it. All right, everybody, I have the $25K she proposed will probably have a cap on income and only put people who can't afford it in a position to buying a property they can't afford. Zach, I hear you on it, and I'm not saying the idea of it, of making housing available for more people, is bad. I agree with that. My point is this, though. You're increasing demand because you're increasing the buyer pool. So if you are increasing demand and increasing the buyer pool without increasing supply, prices are going up. This is what happened leading up to 2008 is they created an initiative for everyone to have homes. And so in doing that, they made it easier for people to qualify, meaning lenders became more lenient with lending to people. And what ended up happening is people that bought homes couldn't afford homes. Like they were destined to fail. And this is the part that sucks. And then you had the bankers and Wall Street get greedy on that growth, and then the whole thing imploded. So you just have to be careful with it. That's my whole point. All right, everybody, I actually have to jump on an investor call right now. Thank you, everybody, for being here. Thank you for starting this thing off with wins. I hope we covered some good stuff today. I will find some time to go live with everyone tomorrow. Love you guys. Have